Kenya's capital, Nairobi, is touted as the economic hub of East Africa, and accompanying this status has been a significant boom in the property market as investors cash in on growth.
What's interesting in Kenya is it's got a very dynamic economy, okay? It's an emerging market and people are very interested in taking part in that market. One of the first areas that develops in any emerging market, of course, is the property market, yeah? So that's what's leading to that interest.
Further stoking interest in real estate is a cut on the central bank rate to 13% in the month of September, prompting banks to reduce their lending rates.
The interest rates are what really hold the market to where it is at any point. In the beginning, the middle market, the low market, and the up market was really doing well, and we've seen it grow over the years. Like from the years from 2000, there wasn't a lot of activity in the market, but we've seen a lot of interest coming into the market from foreigners, Kenyans abroad, and generally from businessmen.
I would say over the last 1 year, because of the high interest rates, the mortgages have had very low uptake. But now with the changes that we've seen over the last 1 month or so, where the interest rates have come down to as low as 15.5% with Barclays, and with something that we've also had for a long time, the 14%, we've seen the uptake really coming up in the last couple of weeks.
As property prices within the capital peak to unprecedented levels and infrastructural projects open up more inland areas, property developers have shifted focus to the periphery of the city.
Of course, the new roads are making that all the more feasible for people. You know, the Mombasa Road has led to a huge amount of development out in Athi River, Machakos, Syokimau. You look at the Thika Road and, you know, the developments along Kasarani, all the way out to Thika. But also a byproduct of that is, of course, the development along Kiambu Road, because now the traffic jams are cleared on Kiambu Road because they're clearing out onto a much better Thika Road. You're seeing huge amounts of development coming up there. Very, very popular developments out Kiambu Way, Limuru, you know, all of the satellite towns are growing. And of course, that's been taken up to a whole new level by people like Tatu City, who are talking about whole satellite cities on the edge of Nairobi to take advantage of the infrastructure that's coming in. And you've got the same with the ITC city that's coming out on Mombasa Road. So I think people are looking for solutions. They're looking for ways in which to mitigate the high cost of property in Nairobi.
And for those seeking to make a purchase, what is it that they're looking for?
We are looking for affordable houses in terms of cost and quality. Mostly what is around is apartments. My taste is not on apartments. I would prefer a maisonette on my own land, not in a public land.
Despite the housing market having enjoyed robust growth, the crack on the wall appears to be a low uptake of mortgages among the populace and a seemingly large portion of the low-end market that has been left out of the boom.
The people who have cash to buy are either the older people who have saved this money in maybe fixed deposit account or just their basic savings for a very long period of time, for this one goal of buying a home, which they're finally able to buy cash, because mortgages are not something, there's still a stigma about mortgages in the Kenyan market.
The real solution, yeah, is in finding low-cost housing. Yeah, the problem there, the high cost of finance in Kenya. You know, when you're talking about commercial financing, you know, project financing at 25%. That's almost the entire margin that a developer will be looking to make.
With current demand for housing far outstripping supply, players in the sector are quite optimistic that the gains realized will continue to accelerate. For Eye on Kenya, I am Claire Mudenji.